Well, g'day there, traders and friends, market participants and enthusiasts right around the world. Thanks a lot for joining me as at this Saturday, as I go through and recap a lot of our top 12 individual stocks that we have been looking at over the past number of weeks, and really just to recap some of the movements that we have seen over the past 1.5 weeks. It looks as though the dynamic of the market, it has shifted. It shifted at this support area that we've been paying very close attention to, and as such, a lot of these individual companies have pushed off from their respective support areas, which have brought in some pretty decent returns, especially when we begin to tie in options contracts to these movements. This is not going to be, in many respects, a market update. If you want to find that market update and also trade analysis, I'd encourage you to have a look into that pro analysis class. I recorded that yesterday. It is an hour and 29 minutes long. We did go through the 3 US indices, gold, silver, and of course these top 12 stocks. It really was that of a management type of week, but also some pretty interesting analysis as we move into the week upcoming. Don't forget, really a long story short, that this magnet up here at these respective highs dating back to late January are going to continue to pull the market off from these lows. It's just a question really of how is this market going to act as we continue to grind all the way back up to those areas. And then of course, what is going to happen to the market dynamic once we begin to interact or at least close these open windows that at this point are still obviously open and give us some pretty decent returns or at least targets to hit when we start breaking it down through the eyes of risk and reward as well. So a pretty interesting class yesterday. Again, this is going to be a recap. I think the last market commentary I left you with was at the close on Wednesday, and the markets and the individual stocks that we've been following have been more or less continuing to the upside. So let's get into it. First of all, we have Apple. Two triggers on this, 183.89 and also 184.75. We closed this week at 188.60. So a pretty decent move there on Apple. This is the beginning of what appears to be that of a breakout. My target on Apple is all the way up at $199 per share. So we still have quite a distance to go. It's going to be interesting, however, if the market pulls back. Okay, you're going to want to watch for Apple to actually retest this support and then essentially base somewhere around the exponential moving averages. However, this is still looking very, very good. We've got the CCI pushing above that 100 line. It's registering above 200 at the moment, and the ADX really likes this bullish trend, which really was sort of set in stone post earnings, ready towards the end of April. Let's continue. We've got Amazon, which hasn't triggered yet. Amazon and Netflix, very similar to one another, basing off from the rising exponential moving averages. This is something that may actually trigger this week. If not, it is bound to trigger over the coming weeks, unless of course the market takes a turn for the worse. Not really expecting that, so to speak, as long as that support, macro support area holds. But this essentially is in a short-term consolidational type of movement, holding up very close to its respective all-time high. So that trade there, although we're not in it, is relatively exciting as we draw closer to ultimately being priced into that individual stock. We've got Boeing Airlines breaking out above 336. We closed the week at 342.46, a pretty decent trade there. We've got Baidu, another fantastic trade. We hit our target 2 sessions later. 258.59 was the breakout entry. First target 267.51. This is getting very close to its respective all-time high. You have to expect that Baidu is going to slow down, probably short term, somewhere just shy of really this 275 figure up here. If we can hold above the exponentials and sort of set up a similar type of pattern to Amazon and Netflix, this is Baidu of course, well then it becomes again the sort of continuation breakout trade, but we're going to have to pay attention to what the 3 US markets are doing once they push on up to higher prices. We've got Caterpillar as well, a phenomenal trade. 148.07 was the breakout entry off from this support area. It did take a little bit of time for this stock to actually make the turn. However, we have made the turn. Now, I went into Caterpillar in comprehensive detail, really, and I spoke a lot about this earnings candlestick just here and the possibility and probability that we may actually pull on back down to about 148 again before we can ultimately break above this resistance swing high. So it's a good time, if you are listening to this and you are in Caterpillar, to begin potentially legging out of at least a portion of those call options, bank some of that profit, put it in your back pocket, and then we may have an opportunity over the coming weeks, if first of all Caterpillar doesn't break above this pivot, to actually reload again back down at lower prices if we see this gap close, and of course if it holds as support moving forward, which I believe it is going to do. I will keep you updated on that. We've got COP above 67.89. We closed at 69.44. Not the biggest of movements, but there's a fair chance that this is the beginning of another breakout, which is going to move into that of a trend continuation. So if you pay attention to these exponential moving averages, you can see for yourself that we're starting to get separation, or at least a strong sort of upward sort of advance, or at least the slope, the angle is looking quite good. And this is going to act as support if in fact COP does something like Apple to come on back down and retest this support area. So again, looking for the profits, or at least the returns in COP to develop and to build over time moving forward. We've got CVX. I personally did not take the trade, and a lot of people didn't. However, if you did, you still were compensated quite well. This is very similar to the Baidu type of trade setup. We're back up at this resistance area at 130.79. You can see that this has been a past resistance area coinciding with the market tops towards the end of January. It actually rolled over a little bit before the markets did, but essentially what's happening is we're back up at resistance, and either we're going to get the breakout above this trigger, or we're going to oscillate all the way back down to 108.02. Went through some interesting analysis on that, and there's certainly a trade brewing with CVX. We have Google. We were paying attention to the 1000 pivot first of all. A few people actually jumped in down at 1000 prior to the move, and that is absolutely phenomenal. This has turned out to be probably the biggest, I guess, profit maker for us over the past 5 sessions. Otherwise, the entries were 1050, 1055. We closed on Friday at $1,103 per share. So no matter which way you slice this down, this is incredibly profitable. We've also overtaken this swing high dating back to the midpoint of April, and it really sets the stage, so to speak, of Google ultimately coming back up to 1,131. I've spoken about this in the past, and what's going to be interesting about Google is that we should see this, once it hits this area, begin to slow down, and it may enter into a period of sort of indecision, which is going to be that of a minefield for a lot of people. If they're looking to actually get involved in Google up here, it may lead into somewhat of a chaotic type of environment for Google. But eventually, once that shakes out up at these higher prices, we're going to have a pretty decent bracket trade on Google. It's going to be the rollover at this point, or ultimately the breakout of this level, which is ultimately going to move above this swing high and also the swing high, again dating back to the late period of January, where we really began the year more or less on fire. It was a very phenomenal start to 2018. January Google, I remember this, was just going absolutely parabolic. But at the same time, we've really had to cherry pick our entries most recently, and I'm very proud upon some of these trades that we've placed off from these lows and taking advantage of some of these pushes off from what appears to be, again, the holding of a very important macro support area. Now, IBM is pretty much a little bit stagnant, a little bit dormant, a little bit sleepy. It hasn't really gained any traction whatsoever. This is post, of course, the earnings sell-off. We have stabilized at 140, but at the same time, this is most likely going to coincide with that of a little bit of chop down here as we define the perimeters. And then once this really establishes itself, or if support can hold at 140, ultimately this is going to be that type of Google trade that I've just gone through, which is going to be the closure of its respective open window. So if I just bring back up the chart of IBM, you can see up here 158 is my target. However, the trade simply isn't really set yet, and we haven't had a great trade on this, so to speak, or at least we haven't been all that active in IBM, and that's largely due to earnings. But there is going to be a trade, and it will come relatively soon. Netflix, whenever I say Netflix, think about Amazon. Amazon over here, holding it at resistance above the exponentials. This is brewing. The volatility in Netflix is bubbling away. This is set to rocket. I cannot tell you when, but if we start closing and moving above this swing high, that's going to bring in some tremendous returns, which is also going to be the trend continuation of Netflix to the upside. It's very interesting if you think about it, just how quickly the dynamic or the sentiment, the psychology of active market participants can shift, especially off from those lows. I put out that video. It was titled Hammers, Hammers, Hammers at that support, and also a follow-up video which was titled Has the Market Turned? And since then, the market has, and it's moved strongly to the upside, which again, you can see we're taking advantage of with a lot of these open positions. Tesla, there is no open trade in this particular stock. I'm still relatively bearish on Tesla, and it's pretty much a good insurance policy at this particular moment if the market does decide to roll over and start pushing below macro support, which again is a little bit somewhat unexpected or sort of improbable at this particular point, but it's there anyway as an insurance policy. And if this happens, I mean, you'd be looking at Tesla moving back down to 240, but potentially even pushing below the lows that we priced in at the beginning of April as well. So not really looking to trade Tesla, so to speak, but it is something to keep an eye on. If we really fail at this pivot at 310 or around 300, which sort of coincides with the back test of this support, well, then this could be an absolutely phenomenal trade. It could be a very quick trade and a trade that's going to bring in some pretty decent returns over a very short period of time moving forward. Not looking at Tesla bullish. The other stocks, however, are overwhelmingly bullish. The only other stock which sort of doesn't really fit that criteria at the moment is IBM. However, I assume if this support level holds, we are going to see a very possibly quick, if not a little bit of a grind high to close that open window, as I've already referred to. Now, as I do from time to time, I do like to speak about additional stocks, and I've got two that I've gone through during the week and look interesting to me. I mean, this is outside of course, some of the other stocks that I've routinely given you updates on. PayPal is one off from this support area. It's coming back up to retest this declining resistance line, which is quite interesting. So if you took the PayPal trade, this is the perfect opportunity. If you see a bounce on Monday or Tuesday, to begin culling positions right around this $80 figure. I mean, I wouldn't be holding it specifically to 80, but pretty much 79.20 is my target on this, the downside resistance area. And you can start to see that we have a little inside date type of dragonfly doji candlestick, which again is reflecting a little bit of selling pressure at this pivot up here. So it would be ideal to begin liquidating out of PayPal. Interestingly also, we have DAL bouncing off from the support area. This looks quite good, especially if you begin to bring up the oscillators, starting to move bullish as well. And its close cousin that I've recapped also on this YouTube channel is LUV. We haven't really seen the follow through with LUV. However, what we have seen is this 51.39 pivot hold. This is what I was looking at, and I think I gave you an update. I'm not sure which video it was in, but I certainly spoke about LUV around this 51.39 handle. This is coinciding with the earnings candlestick over here and this long lower wick, which is telling us a lot. And as this sell-off has sort of continued, volume's been a little bit flaky, but we're starting to see one support hold at this lower earnings wick, and that tells us a lot of buyers willing to buy this just above that 51 handle. So this is looking quite good. We saw a strong reversal on Thursday and a little bit of a pop and a continuation on Friday. If this really begins to sort of stabilize here and start breaking above and closing above 52.77, this opens the doorway once again for potentially, if the markets continue to rally, for LUV to move all the way back up to maybe 59, if not $61 per share. Now, I don't want to put a time frame on this, don't really have to if you can push those options out far enough. The good news is that we've moved through earnings and now we don't have to liquidate any positions as we move closer to earnings. So we've got sort of that open window of time before us that we can allow LUV and also DAL to hold their respective support areas. This is now the weekly chart of LUV. $51 per share. You can see how many times we've actually bounced off from this. It is macro support. This is not that of a head and shoulders pattern at the moment. However, it may turn out to be a head and shoulders pattern if in fact we get up to 60 and fail, because this will more or less look like a left shoulder here, a head, and then this will ultimately be the right shoulder. I'm not calling it that of a terminal reversal pattern at the moment, but it makes a little bit of sense if we see this rally and if it begins to roll up here. That's when I'll take the potential of a head and shoulders sort of pattern a little bit more seriously. But I just wanted to update you on LUV. Also, these are two additional stocks that I'm looking at. Somewhat similar sort of setups. We've got JD, which is of interest to me. The reason why is because if you go out to the weekly chart again, it looks like we're in this little trend dating from 2016 through to where we find ourselves at the moment. And what makes this even more interesting is that we're starting to see gaps to the downside, or at least the continuation of gaps to the downside, but we're really not seeing any follow through. So this to me looks like that of an exhaustion gap. Very rare, so to speak, especially during that of bull market periods, but exhaustion gaps generally lead to very strong reversals. And what I mean by reversals is that if you think about the state of the market, it's really going back to January during this period up here, and the sort of intermediate correction that we have been in on the Dow, the S&P, and the NASDAQ through to where we currently find ourselves, and most recently 1.5 weeks ago where we started to price in those hammers at support. JD hasn't really made the respective move. It generally moves somewhat in synchronicity with the market indices themselves. And there's a good chance it's going to play catch up if this is an exhaustion gap. We started to see a little bit of volume flow into JD leading into earnings. Earnings came out. We did see that of a dark candlestick. But at the same time, if I go to the weekly chart, not only do we have this bullish trend line here, we also have this area of support too. And if you pay attention to this pivot down here, we've actually closed the window most recently. So this is looking quite good. This is a 3-week pad up. I know, a 3-week setup. I know this looks like that of a bear flag, but at the same time, it looks like the sellers are really beginning to sort of exhaust themselves. And if we continue to see the market move to the upside, we could see a very quick move off from this sort of 36, 37 handle. And also we could see ultimately see JD breaking above this swing high at 41, but taking us back up to about 46, if not 49 as well. So it's something to keep an eye on. It looks as though these Bollinger Bands are beginning to squeeze. You can see the top band moving down quite aggressively, but at the same time, we're pulling away from this from the bottom band as well. So this is looking like a textbook Bollinger Band reversal. We've got the exhaustion gap here. We're sitting on a trend line at a macro support area, filled this multi sort of monthly gap, so to speak. And I mean, if this pivot holds, we could see fireworks on JD moving forward. The other stock, which has sort of moved already, is TWX. Now, TWX is holding support at $92 per share. We've got a very nice defined target up here at about $97. So let's just say hypothetically we start the week relatively weak. We see a little bit of selling to begin on the markets, and TWX pulls on back down to 93 or 92.50. It may be a pretty decent opportunity to jump and nibble on a couple of calls down around this sort of support area, because if this holds, you can see in the past we do generally see some pretty nice movements back up to that resistance area, as I've already quoted, at around $97 per share. If I had to choose between TVX or JD, I mean, they're a little bit different, but at the same time still somewhat similar. I'd probably go with JD. The reason for that is because JD hasn't made the move yet. However, TWX is more so that of a confirmed movement. We've got a bunch of lower wicks down here, and we've also made the turn. The turn hasn't actually eventuated on JD. However, I am sort of anticipating that turn to show up over the next couple of weeks, depending on if that Bollinger Band squeeze really gets moving, or at least if we see the continued development of what appears to be that of a Bollinger Band squeeze. So that's going to be, I guess, this Saturday sort of market recap over the past 5 sessions. I encourage you to have a look into that pro analysis class if you're looking for analysis, if you're looking to learn analysis, because again, this YouTube resource, it's really not going into analysis, so to speak. You might understand what I'm talking about, or at least the basic concept of it. But if you're looking for sort of in-depth analysis on the individual stocks and also the markets, the resource to do that is in that pro analysis class. It's recorded, it's up online, and it's a fantastic resource if you're serious about trading and if you want to become an autonomous trader, because the idea of it, really the purpose, is to teach you how to do this for yourself. All right, and anyone can learn how to do that. And I think anyway, it's tremendously powerful. And I think what we've displayed, or what I've just spoken to you about, just recapping some of these stocks on the left-hand side of the screen, it's been a really tremendously profitable period, really no matter which stock you break down. And things are good. Things are very good as at this Saturday. So I wish you a very nice weekend. I'll be back with you in the week upcoming for some more market addresses. Other than that, everyone, I think I've covered what I've wanted to say. I wish you again a nice weekend. It's James signing off on behalf of Pivot Point Trading. If you have any questions, by the way, email me, success@pivotpoint-trading.com. All right, everyone. Farewell.